Well, friends, good morning. Jagendra Rana here. So, product of the day is money insurance. See, a most common requirement of commercial institutions is money insurance. Why? Because every business is done with a motive of earning the profit or the income. So when this income is generated or earned, this comes in the shape of money. Now the primary question is how to protect that money, because the safety and the precaution or the protection of that money is the prime need. So money insurance comes for the rescue of these commercial enterprises from the safety and protection purposes. Now let us see what is the coverage of this policy. Loss of money while in transit from office premises to bank or post office and vice versa. Policy covers loss of money which is kept in safe outside business hours. Suitable for purposes which draw large sum of money for daily operations. And the policy covers losses due to robbery, burglary, theft, and hold up. So, what are the requisites for this policy? Say, declaration of per transit limit has to be given by the proposer. Declaration of annual transit limit, minimum amount of money in safe outside business hours, number of employees covered under fidelity guarantee policy, persons who deal in cash or money, maximum amount lying at counter outside business hours, safety and alert mechanism, make, model, serial number of safe or strong room, employees handling cash is authorized and permanent employees of insurer or not. These all things are required to be disclosed by the proposer on the proposal form itself, because these are those underwriting criteria on the basis of the acceptance of the cover and the premium rate has to be decided. Now the question is, what is money? In the sense, what is included in the terms money? So money includes cash, bank drafts, currency notes, checks, postal order, money order, current postage stamps. These are all part of money. And the money at and till counter means the policy covers loss of money lying in the and till and or counter within the insured premises. Policy covers losses due to burglary, robbery and hold up. It also covers the reimbursement for reasonable cost of repairs to the till and or counters securing money subject to 20% of admissible claim of Rs 10,000 or Rs 10,000, whichever is less. Then there are add-on covers for the policy. ATM withdrawal protection is there that covers loss of money occasioned by hold up, robbery, mugging up to a maximum of Rs 5,000 or the limit prescribed by the insurer during the period of insurance. belonging to the business of the insured while such money has been withdrawn from an automated trailer machine, that is called ATM, and is in transit to the insured premises. Then fidelity guarantee cover. This policy also provides and covers losses due to dishonesty or fraud by an employee, subject to cover for permanent employees only, or the employees should be authorized to handle the money. As far as the premium rates are concerned, normally money in transit including terrorism is covered at the rate of 1 rupee per milli. Money in transit excluding terrorism is almost 0.75, though this is non-tariff business, and the prices are rated and charged by the insurers according to the merits of the individual proposal. But the premium ranges like this: money in safe premises 0.5 per milli, money at and till counter 0.5 per milli, ATM withdrawal protection 0.5 per milli, and fidelity guarantee 10 per milli. Special conditions of the policy are that money to be carried or maintained in safe by authorized employees only. Daily record of money kept in strong room or safe to be maintained. Such records to be deposited in secure place other than the safe or strong room used for keeping money. The keys of the safe or strong room shall not be left on the premises out of business hours. Such keys, if left on the premises, shall be deposited in a secure place and not in the vicinity of safe or strong room. As far as underwriting guidelines are concerned, the claim experience of past 3 years has to be checked. Favorable features have to be looked into. Places between which money is carried, armed guards accompanying the person carrying the money, what is the alert mechanism and what is the mode of carriage of money, and the maintenance of books of accounts. So, for example, money in transits, sum insured is 1 lakh. Rate is 0.35. Money in transit annual limit, say suppose 20 lakh, 0.35. Money in safe, if there is any amount, 0.25. Money at or till counter 50,000, sum insured 1 rupees. ATM withdrawal protection 5,000 rupees, 10 rupees rate. Fidelity guarantee 50,000, rate 10 rupees. On the total premium, 18% GST is charged. So if you see the policy, you'll find that the policy doesn't cover the losses caused due to robbery, theft, fraud, dishonesty, or collusion by any employee or agent of the insured, or the losses arising out of shortage due to clerical or accounting errors, additions, depreciations, or direct and indirect consequential losses of any kind, and losses occurring other than the premises specified in the policy. So, as far as the policy issuance is concerned, all fields of proposal form are required to be filled in by the proposer. Maximum amount carried in single transit limit must be specified. Number of employees carrying the money, their duration of service, and any past history should be looked into before granting the policy. The mode of carriage by money is carried, that is on foot, on bicycle, on rickshaw, in bus, or taxi, or in the insured's own vehicle. In case of own vehicle, insurer can think of discount. Whether armed guard accompanying the person carrying the money, places between which the money is carried, and location in relation to the neighborhood. The route through which the money is carried, whether it is a thoroughfare or traverses through any sparsely populated or lonely area, and whether the route would be varied so as to prevent an ambush. The amount of the day when the money is carried, preferred timing should be between 9 a.m. to 5 p.m. Distance to be covered should be within a reasonable distance according to the city. The general condition of the law and order in the area through which the money is carried should be safe. So this is the money insurance, which is required mostly by all the commercial institutions, because the protection of money is the first priority of any enterprises, maybe a shopkeeper, a microfirm, a SME, or a corporate. Because in the commercial institutions, normally the money is kept either in the counter or in safe. So the safety is the prime concern. And if the money is carried on daily basis to the banks to deposit, that safety is again required. So this policy will provide the coverage of all kinds, and this is the safest way that will protect the money of a commercial institution. Thank you very much.